Arvind, great to have you here with us this morning on NDTV Profit. So many factors to break down, but let me start with your take on whether you think the FII view gets impacted in any way with the kind of results we've seen coming out of Maharashtra.
I'm not sure that a state election should matter that much unless you tell me that the central government has not been spending money, what you were just talking about, on capex, and other disappointments that we've seen in the economy are all going to be fixed because of Maharashtra elections. If that's the case, then I think FIs will care. But I'd like to see more clear evidence of why the capex has been missing in action, how that'll get corrected, and how some of the other weaknesses that we've seen, whether it is demand from for power, or whether it's FMCG weakness in demand, a lot of things that seem to be a problem. So I guess there will be a rally here. My concern short term is we need to see the economy, which seems to have gone through what I would call a mid-cycle slowdown, clear evidence of that mid-cycle slowdown getting behind us to get really excited. And if this election does that, then fine. But I think FIs will want to see a little more evidence.
Good morning. It's Amina joining in as well. So where is the bias? If you were buying, are you buying US? Are you buying India? Or are you buying India, China, Japan? Allocations are being made. Money is on the sidelines. But where is that money going to go then?
Well, look, the US market has been on fire. President Trump's election has been a huge tailwind for the US market. So the US market is clearly in a separate trajectory than either Europe or emerging markets. But that doesn't mean that all the money is going to only go in the US. US has the whole AI boom. It's clearly the big winner there. And US obviously has a lot of deregulation, taxes, all of that hope built into the market. So the market is not cheap. I would say China was the value market, but it seems like China is not following through, and it's going to be in the kind of bullseye of President Trump when he comes to office in terms of tariffs. So, India has been kind of one of the standouts in the emerging markets from a growth standpoint. I think India will still get the long-term investors interested, because I think the growth story in India long-term is still on solid underpinnings. The political reality is that today's election confirmed that India is politically stable, notwithstanding whether there's a coalition of the government at the center or not. And the economy, notwithstanding the short-term weakness that we've seen, has all the underpinnings for long-term growth. So I think India is a place we're looking to put money. We've been patient, waiting for some of the dust to settle on some of this economic weakness. But outside of the US, India remains one of our favorite markets.
Yeah, completely agree with you, right? This is maybe an interim euphoria that the markets are reacting to. But you highlighted political stability, and we've seen what's happened in the US with Trump coming into power. While stability was never an argument there, it's meant excitement around the economy. So if India has political stability, India has corrected significantly, I would say about 10 to 12% on the benchmark, 20 to 30, maybe up to 50% in Modi picks in so many ways that the world had been betting on. So valuations are a lot more attractive today than they were maybe a few months ago. What else do you want to see to add that extra dollar into India? Because let's not forget that the markets respond before the economy responds. So preempting an improvement in the Indian economy, I would imagine people would want to come and buy into the market, right? Because then you've lost an opportunity if you wait too long.
People preempt the economy when valuations have gotten attractive. Valuations are not attractive measured from a peak. Valuations are attractive measured from a long-term valuation. So let's not confuse using near-term reference of if things were very expensive and they're less expensive now, therefore it's a great value. So yes, India is attractive. Yes, India has long-term growth. Has India gotten to attractive valuations in terms of any historical measure? Not yet. Have the mid caps or the small caps gotten so cheap that they're at trough valuations from a historical perspective? No. But that doesn't mean that we're not able to find attractive opportunities. Yes, we are finding, but to jump in with both feet, either valuation would have to get that attractive, or growth would have to seem to be on a very accelerating trajectory. And I think we're kind of nibbling at it, but we're not in with both feet, because neither one of those cases, to us at least, is a very obvious case right now.
Arvind, I'm just wondering that with the kind of risk-on mood that we're likely to see and the rise that we're likely to see in markets this morning, is this another cue for FIs to deepen selling? Because if the plan is to exit, then you're exiting at better rates?
I'm not sure that the FI are waiting for an exit. The FIs are looking for where the best risk reward is. Let's be clear, the FI has been right so far, right? If you're putting your money into the US and you were selling India a month ago or 3 weeks ago, you've done pretty well. But the question is, I think a lot of the good news in markets like the US is already in. If you were betting on China, which we were not, but if people who were betting on China, clearly, that hasn't quite played out as they'd hoped. I think, India's, look, I'm not saying India is unattractive. What you're trying to get me to say is it time to dump India? No, that's not what I'm saying. I'm saying, yes, FIs have been taking chips off the table, but it's not like taking chips off the table from India and rushing into, Brazil or China. US is still the best growth story in the world in terms of the benefits of AI. But India is the long game, steady growth story in emerging markets, and that's why India remains attractive to us. It's just it's not quite as compelling when the growth itself seems somewhat tepid right now, and I'd like to see signs that that the growth is reaccelerating to get much more bullish on the Indian economy. I mean, in the Indian market.
Attractive, but not very, very attractive. But you did mention that you're nibbling into Indian markets. It is a bottom-up approach, I would imagine. You also mentioned consumption is what you're slightly concerned about. What is it that you like, where you see there is value, and the risk-reward is favorable? So maybe sectors, maybe stocks, I'll leave it to you.
Anything, in our opinion, domestic healthcare related, we find that area attractive. We find some of the things in, kind of infrastructure related, although there's been some disappointment lately, industrials related, there are some interesting opportunities there. Things have corrected a lot. And so, those are some of the areas that we are most interested in, even in some of the high quality, banking sector, and even some of the second tier banking sector, things have sold off a lot. So if the economy is going to bounce back, then it's not going to do that without the financials being a part of it. So that's another area of interest to us. So there are a few areas which are interesting. And again, it's bottom up, so it's discrete stocks rather than making a big sector bet. But yeah, there are some areas where there are more opportunities than others.
Arvind, always good talking to you. Thank you for adding that perspective. For now, we will enjoy the euphoria that, of course, Nifty is expected to see.